Hi, good morning, everybody. My name is Noble Dracone. I'm the managing partner for Dracone Capital Partners. I'm here filling in today for Kyle Ellicott as the guest host for today's topic. And today's topic is real simple. We're going to be talking about how the inflow of new investors into the crypto assets have affected the market and what we should look to for the rest of 2021. We have a lot of great guest speakers today. And Gary, go ahead, introduce yourself.
Yeah, thanks, Noble. My name's Gary Fowler, and I'm a serial entrepreneur and investor. I've done 17 companies, was on the original management team, Click Software, which was sold to Salesforce about now 22 months ago for 1.35 billion. I also have the co-founder and former president and CEO of Eva.ai, a premier AI HR tech company out of Silicon Valley. And today I started GSD actually a couple of years ago, but I am the CEO, co-founder, and president of GSD Venture Studios, a premier AI venture studio and quantum, helping companies from around the world go global using Silicon Valley as a port, and write a lot about AI and quantum. I've written my chief of staff said 120 some articles, I guess. So we're writing a lot. Sometimes we forget, but it's great to be here, Noble, and great to be here with some friendly faces that I've seen before. Thank you.
Yeah, it's good to see you. Let's turn this over to Matthew. Matthew, it's good to see you. I haven't seen you in a while. Go ahead, tell us about yourself, who you are, and your company, and what you guys do.
Thanks a lot, Noble. And the reason you haven't seen me for a while is we're getting ready to do the final close on our current fund, blockchaincoinvestors.com. So it's a busy time. But I'm based in San Francisco, Silicon Valley. We're the world's leading blockchain venture fund of funds, blockchaincoinvestors.com, investors in about 250 blockchain companies, including 20 of the unicorns, the Krakens, Coinbases, Ripples, Upholds, Wires, and so on of the world. And then for the purposes of today, I also help, and over the last 15 years have helped build the world's largest angel investor network, Keiretsu. And so we've helped many thousands of people become investors over the years in early stage tech. And we have, and therefore I think I have some observations about the best practices and also, what new investors should think about and be aware of as they enter the space. And I'm hoping we'll touch upon some of that today.
Absolutely. It's good to see you, Matthew.
Thank you.
Now let's go ahead and see David. Are you there? Okay, great. I can see
I
you.
am here.
David, tell us about ProChain Capital and what you guys are doing in the space and a little bit about yourself.
Sure, Noble. Thank you very much. And thank you very much to the esteemed panel here today. Looking forward to the discussion. Certainly very timely because of, a lot of retail action generally in the markets these days. So certainly individual investors are interested. They should be empowered. And, that's not said in any political way. They should be enabled is a better word maybe. And allowed to have access to what we all think, I think on this call is a massively burgeoning asset class. So I am David Towle. Amongst some other stuff in my career, I am the president of ProChain Capital. ProChain is a crypto-focused hedge fund. We're multi-strategy. What I mean by that is we not only invest in tokens and cryptocurrencies, both on a long and short basis, in cash and in derivative. But we also invest in equities and fixed income stocks and bonds, said another way, of companies that are involved in either crypto, payments, digitization of assets, and so forth. And then we also have a small portion of our portfolio that's devoted to similar types of investments, but in the private space, venture capital and seed. So best summed up in the way that we are very focused on this asset class at ProChain Capital, and we want to make sure to be able to make money no matter where the opportunity or how informed the opportunity presents itself, whether they be in tokens and cryptocurrencies or in stocks or in bonds or in private investments.
Awesome. So, let's dive right in. Yesterday PayPal made a point to let everybody know that they're going to, at the end of this year, be all in on crypto. They create a whole entire division so that people can use their crypto deposits to interact with over 29 million of their merchants, so that people can buy, sell, get goods, get products. The question I really have, and I'll take this to you, Matthew, because you're really knee deep. The question I really have is crypto really ready to be used in a real merchant style way? You know, with the fact that things are fluctuating, the prices are moving up and down, are we starting to see the conflict of the idea that there's a cryptocurrency and now there's a quote unquote currency to spend? Is crypto, the way we see it, really an asset, not a currency? What's going on, and how are we going to kind of mitigate the loss as people are buying and selling and trying to, avoid price differentials?
Okay, it's a great question, Noble, but in order to answer it, let's look at the question in the context of today, and let's talk about cryptocurrency. So today, Noble, if you ask me the question today, is the Turkish lira or the Venezuelan bolivar a reliable currency for payments in the US? I would say no. They're too volatile. They're hyperinflating. I just read the Turkish official inflation rate right now is 12%, but some people who track it thinks it's currently at 39%. So volatility of assets comes with the world of assets, and some are volatile and some are not. And when you think about something like payments, it's true, you don't want a volatile assets, especially, if you're an enterprise and you take 60 days to pay your payables, or as an example, you don't want, the person you're paying doesn't want a volatile asset. They bill you in dollars, the dollar, or in Venezuelan bolivars. You don't pay them for 60 days, and when you do pay them, what you're paying them is worth a lot less than it was 60 days ago when they sent the invoice to you. So that issue is not a new issue, right? Payment systems prefer non-volatile payment methods. So now we look at the world of cryptocurrency, and within the world of cryptocurrency, we have volatile cryptocurrencies and we have non-volatile cryptocurrencies. Bitcoin is fairly volatile. A stable coin like Tether is pegged to the dollar, and so in dollar terms, it's not volatile. It could still be volatile relative to the yen, because the dollar and the yen might be moving, but the dollar stable coin to the dollar shouldn't be volatile. So the reason I'm answering this question is because if you choose to use a volatile form of payment for a payment where you don't want volatility, it's not a good fit. It's not fit for purpose. On the other hand, there are people who love volatility because traders make money off volatility. If there was no volatility in markets, there wouldn't be any traders because they couldn't make any money because everything would be flat. So I know that isn't necessarily exactly the question or the answer you were looking for, but I like to always begin with how it works today, because what you're going to find is the critics always try and talk down the future because they have a vested interest in today. But today isn't perfect. I mean, if today was perfect, we wouldn't need innovation and we wouldn't need change. And the whole point is today is broken. The world is not fit for a digital world, and today's monies and assets don't work in a digital world. So they have to be upgraded and they have to be changed, and that's what we're all trying to accomplish. So I hope that's helpful.
David, I take the same question to you. You're already in with PayPal. We talked about Stripe, and you're looking at it. How do you see this playing out with merchants accepting crypto, and can they really accept crypto and function? Kind of same question I posed to Matthew.
So certainly I agree with the comments that Matthew made, first of all. I think certainly in emerging markets, this type of, transactional activity in tokens will be and is being embraced massively. It's probably not getting as much news and headlines as it should. But in terms of developed world, it's only going to be for those that can, handle the heat. But you know what? At the end of the day, it's got to start somewhere. And I think the fact that it's starting is really the most important point, which is we're ready to go. The infrastructure is there. The currency is there. We'll get more stable currencies. They'll be issued by different issuers than the ones that issue private tokens now. But it'll be for those that are not faint of heart. They'll be able to start immediately, and for those that are a bit more faint of heart, it'll take a little while for them to get onto the bandwagon. But the proof of concept is here. I can't say it any more loudly. That this is it. We've crossed the Rubicon. There's no turning back. This is where society is going, and you've got to get in on it, because frankly, in my mind, and I wonder if my panelists agree, there's no turning back. I mean, actual physical paper, metal coins is going away. It's a melting ice cube, of an asset. It's not mean that value is being lost, but certainly value is being created elsewhere, and you really need to have exposure to it.
Gary, when you look at you hear the other two panelists, where do you see the role of both artificial intelligence, quantum computing in this new world where crypto and retail investors and just retail users are trying to integrate? Because it seems like the most difficult thing people can do is just even acquire crypto. It's great to have this new inflow of investors, but do they own it? How do they own it? And how do they manage it once they get involved with, to Matthew's point, I used to be a trader for 28 years. We'd have to try and watch and monitor 200 different pairs. How do you do that with tokens when you're just an average person?
Well, I mean, that's no, but what was it, Shakespeare? And that is the question, right? Because, as a country boy from Pennsylvania, it's always, okay, how does somebody do it? How do they get involved? And, every time we have technologies come out, people are resistant to the change till it starts getting adopted on a massive basis. So we need to have more people involved in it. The challenge is this is changing so fast, and especially with the digital transformation. Then you have COVID coming up, where people are afraid to touch money because they're afraid of getting sick. So, I know one thing: if it had a rattle on it, was a snake in the woods, you don't touch it. So I don't know about you. Whenever I go out now, so I'm going to get a tea in the morning at Dunkin' Donuts. I'm real nervous if I got $5 in my hand. I'm giving it to them. I get the sanitizer out. I'm doing this. I keep the window up a little bit in case they're getting too close.
What mobile phone do you use, Gary?
What mobile phone? I got my iPhone.
Oh, you can just activate, touch, pay. Yeah.
I understand, but I'm trying to break my habits. And I use the credit card, and but I like cash. I don't know what to tell you, man. I mean, I just like cash. It's just something about it. I remember when I was a kid, and I used to go out and I would make money, doing mowing yards and all that. And I would get that $5 bill, and that was the best thing, to smell the money. I know it's funny, but I'd actually smell it.
It's funny.
It smells good.
It is funny, Gary. The reason it's funny, Gary, is because you're actually like most Americans, and I'm American too. I sound English. I'm English and American. But I was on another one of these events, maybe 6 months ago, and there was a VC from India, and the Indian said something like, well, down here in India, we have real-time payments just like you have in America. And we don't have it in America, right? So almost every other economy in the world is eliminating paper money, and America is the laggard, which is really ironic. We used to think we were the world's leader in terms of payment systems and financial ways to do things. We're so far behind. I mean, the Chinese, you can go to a rural marketplace way west of Shanghai, and they're all tapping with their phones to buy chickens or to trade yams or whatever it is they're doing in the marketplace. They don't use paper money. And here we are still.
It's been common. It's been common across the globe. It's been common across the globe. Let's be frank. In Africa, they were trading cell phone minutes before there was crypto and aggressively pushed.
Yeah,
and cell phone
But
yes.
I just want to jump in for a second. I don't know what generation everybody on this call is. I'm going to assume everyone's really young and because they look really good. But I don't consider myself all that old at 46. But I was out the other day with my son, who is my third child, is 12 years old, and he said, "I'll go into the store, Dad. He needed something." And I said, "Well, wait, let me give you my credit card." So I'm not a cash guy, right? I think my parents' generation, when they live and be well, are very much cash people. I'm a credit card person. My son turns to me and says, "What are you talking about?" He goes, "I have all your credit card information on my Apple Pay." We're a dying breed, guys. I'm fully convicted in that fact, and I agree. Also, again, to go back to emerging markets, the desperation that these places have are the greatest hubs for innovation. They don't have the ability to spend hundreds of millions and billions of dollars to create financial systems and plumbing that we have in the United States, that we have invested in enormously over so many years. And thankfully for them, technology allows them to entirely circumvent that system right now. And that will continue to happen. And yes, Matthew, to your point, thankfully there is a lot of entrepreneurial spirit in this country. But if not for that spirit, we would continue to be the laggards. Because we have such great systems to go ahead and rely on. We confidently, put our faith in them. And I just want to turn to the other point that was mentioned about the retail person and how they get into this. I mean, to be honest with you, I think what we all do is a full-time job. You can't dabble in the intricacies of this, right? So I think, for the retail investor, you're supposed to go with the most easily accessible and easily kind of the thing that gives you the warm and fuzzies the best. Granted, you will always have the question about crypto is what is backing it, right? In a lot of cases. And,
like the dollar, David. I had a 4-star admiral on my show on Tuesday. It was a number 2 kind of vice chairman of the Joint Chiefs, former vice chairman. And seriously, I mean, think about it, we're printing $1.9 trillion or more. And so where are we with this thing? And you talk, stable coins. Here's the thing, right? Couple things. Stable coins are backed by the dollar, right? Tether. But the thing is, what's backing the dollar?
You're preaching to the choir.
It doesn't make any sense.
And we'll rein it in. So we have a couple issues, right? The backing of the dollar has always been the ability for the U.S. to be the driving engine and economic workforce of the world. And to Matthew's point, you look at all these other countries, the lira, the yen, they've all pegged themselves against the dollar based on fluctuation of value. And they realize that being their largest trading partner, U.S. buys everything. The goal was to make sure to create some type of stability. And that's why Tether exists and why this exists. But, in a world where people are anticipating and believing that Bitcoin is going to be over 61,000 by the end of the year, anticipating $100,000 Bitcoin, would it make more sense at some point to maybe create more aggressive tethers to Bitcoin? And, and what's your take on the idea that it will end up being self-referential crypto? We already have things built on Ethereum. We already have, the 2.0 coming out, and the overflow from those definitely impact the subcoins that are built on those protocols. EOS development is going crazy, and then we had Flow come out with a whole new NFT protocol. Do you believe there will be a time in which the asset, like Matthew brought up, becomes really the stable coin of all the other assets? And your thoughts, Matthew, to that?
So there's a lot of, we need to unpack that a bit, Noble. There's a lot of things in there. And I also want to just talk about the retail investor as well. what we are doing with technology is we are streamlining the world and making it more efficient, faster, more reliable, more secure, and cheaper. And just in the same way as I don't think a retail customer should have to go to a department store to buy a product from China that is available on Amazon. You know, you can find it quicker, cheaper, and more reliably by taking out a lot of the, if you will, non-value added intermediaries. So I feel the same way about financial services. The biggest drag on performance in financial services is not the underlying assets. It's all the people that get in the way and add their costs on top. And when Alice and I worked in the 90s, both as consultants, and then when she was CFO and head of strategy at Barclays Global Investors, we launched iShares, or they launched iShares. And iShares today is the world's biggest product, bar none, $3 trillion of financial product. But the so what was take out the cost. You know, that was a time when mutual loads, even from people like Fidelity, might have a 3% load, which means you paid 3% of your money at the beginning, and then you paid a ton every single day and month and quarter thereafter, and that dragged down your return. And iShares eliminated most of that, down to 50 basis points or less. All that performance capture means they were high performing. So that is true of every financial asset. And the retail customer is the principal person who suffers from that, because the bigger you are and the more capital you have, the better deal you get. You know, Warren Buffett is a very successful investor, partially because when he shows up at Coca-Cola or Walt Disney, he gets better deals than the rest of us. Think about that. He just gets the better deal. We have to buy it at retail, and he gets sweetheart deals from companies and management teams, and he always has. So I believe that the retail investors should have democratized access to financial products and services, and I don't think they're stupid, and I think they can figure it out. And if we're going to talk about at some point GameStop on this call, I think there is a caveat emptor. I think you have to be careful that you don't over leverage yourself and you don't put your family at risk. But on the other hand, I 100% approve of retail investors being allowed access to what the wealthy of us, we're all wealthy, you know, what we are allowed to invest in, and I think they should. And then I think the digital natives who are now entering their peak earning and saving years, they're going to demonstrate that they expect to disintermediate and get a better deal too. And I'm 100% behind them. I think that is what they deserve.
You know, that's a mixed bag, right? You know, I like the idea that you bring up about GameStop, because GameStop, while not a crypto focus, we look at it on Robinhood as it was supposed to be the egalitarian way that anybody and millennials could trade and buy. But the question is, I get caveat emptor, but if they don't really understand what they're putting at risk, and they don't really understand that the buyer beware phenomena is happening, then, all of you guys remember when the dot-com era first started, and they had forums, people talking up different stock and shares, and it drove an aggressive buy-all mentality. It seems like Reddit and some of these other forums are doing the same thing with both crypto and stock. Where do we kind of draw the line that isn't that okay? You know, I'll say this, Gary, real quick. You know, Gary, what do you think about this, and how do you feel about this idea that people are just talking up these things without care for whether there's real value behind it?
Well, I mean, Noble, they have always done that, right? Some things haven't changed. And I started a company. I started one of the first e-commerce consulting company, got funded by Broadvision in Silicon Valley. It was called Broadient. And, you know, I was right in the middle of it, pets.com and the puppet, and I mean, the whole 9 yards. And so, I mean, it's like Dutch tulip phenomenon. So I mean, that's, one thing about Americans, we're really, really good at hyping stuff up, real good at it. So, I'm not sure everybody else understands it, but we're really good at it. So, part of the challenge, you got to look at the fundamentals. So if we had some insight into really the fundamentals of those companies and had some of a balanced look at it, would be a lot better. So look inside of it. And I remember on Tuesday, the Admiral said to me, and he's on the board of Wipro, he's on the board of Daimler's, was on the board, the CEO of Nortel and SAIC. Anyhow, he was telling me, he said, Gary, you got to look at the board members. What kind of people are on those boards? He said the board members will dictate what's happening with that company. If you look inside of it, are they good people or bad? What are their track records and that kind of thing? And we haven't done that. And so, if you start to just blindly invest, there's one thing, when I'm doing some of my investments, I go in with people that I know that are friends in certain companies. And so I feel pretty comfortable. But, part of it is people go in blindly. And, we get the Dutch tulip and it starts going up. And whose fault is it then? Right? I mean, it's whose fault? If somebody, my daughter, who's millennial, decides to invest, and she's a tech person, right, in New York, and decides to invest and wants to put her money, and she did actually, and put her money into something, who's to stop her? I mean, where's it, if she's not investing all her money, it's her money.
Mm-hmm. Well, I take it to you, David, real quick. The same question, different framework. Do we see kind of that maybe we're in the roaring 20s all over again? That everything is good, everything is great, and we don't see what the cliff looks like at the end. And just your idea and your opinion on this, and bringing in retail and the idea that once your barber starts talking about it, you got to go the other way.
No, I don't think this is the roaring 20s. I mean, I'm sure there are certain parallels, but and quote unquote history repeats itself. But certainly there are enough differences as well to understand that it's not exactly the same. I don't think that there is generally euphoria. And frankly, let me just say, I think just a soundbite about GameStop, I think a lot of the people that got involved investing, retail, newbies entirely, knew that they were trading technicals, that they were not trading fundamentals. There was enough, news or, sound out there, noise out there, that this was way, way off the rails when it came to fundamental analysis. That this was all about, a technical momentum play. And maybe there was a short squeeze going on, and maybe there were other types of technical trading activities going on, and you're going to be part of them. I'm not a technical guy. I've been in the hedge fund business for 15 years. Prior to that, I was a distressed debt analyst and trader. And before that, I was a lawyer. I'm a fundamental guy down to my core. So I don't play this. This is not what I do. Would you like to do it on the side for fun, for entertainment? Maybe. I mean, I didn't. I'm not interested. I find it interesting to watch all of it. So that's one point when it comes to the retail investor. To go back to the Roaring 20s point, I think the only Roaring 20s problem that we really have is, I think Gary mentioned this earlier, or maybe it was Matthew, I don't remember which of you, the leverage on the United States balance sheet is very, very dangerous. As long as we continue to be the cat's meow when it comes to investing in the world, and everybody sees us as the strongest economy, the dollar, the most stable currency, yada, yada, we're the safe haven of the world, then we can continue with the fiction. The moment that somebody says, hey, the United States is no longer the greatest, not even if China or India takes over, but I'm saying really puts into question our favorability, our balance sheet is extremely, extremely ugly. It is a Ponzi scheme waiting to explode, but hopefully we'll never get there. I don't think that, in my lifetime, we're going to get there. And frankly, every time something bad happens in this country in terms of catastrophes like COVID, we've had the exercise of going through 2008. All we need to do is print money. I don't think we'll ever see a rise in interest rates in this country in my lifetime, honestly. I question if in my children's lifetime even. I think we're on, the drug, the crack cocaine, for an incredibly long period of time that we can't get off of zero rates. But I think that that's the only issue. That's the only big fiction going on. If that goes away, all bets are off. I mean, it's a massive. It's an unpredictable game changer. That's
How do you feel about that, Matthew? Do you agree with that, or do you have a different perspective?
Yes, Noble, thanks. And David obviously has some very relevant history in terms of what he just said about his years. And it's not, what I'm about to say is not a knock on David. I'm meeting David for the first time. Listen, it isn't true that Wall Street understands what they're doing and everyone else doesn't. Back in the 90s, as a consultant, I did a lot of work at Bank America, and I remember the Bank America head of the credit and loan businesses, Jim Jones, refusing to touch subprime mortgages because he said he didn't know what they were and he would never agree to securitize and sell them, and he didn't want Bank America in that business. Roll forward 8 years later, and clearly New York and London had no idea of the nature of the product they had built and the enormous volume of trading they were doing on an underlying asset that was not what it purported to be. They had no clue what they were doing, and they almost bankrupted the world. That is not an isolated case. There are plenty of hedge fund managers on Wall Street managing billions of dollars who have never experienced a dramatically down market because they got started after 2008, which is 12 years ago. So I just don't buy the notion that there isn't wisdom in the crowd and that retail customers need a nanny state. I'm English, right? I grew up in England. I know what the nanny state looks like. America is the land of opportunity. America is the land in which people get the opportunity to make their fortunes. And if we systematically have an environment where poor people of all races, colors, and creed are disenfranchised and unable to participate in the wealth creation process, and the only way you get to participate is you begin wealthy and you have good connections and you're able to get the jobs on Wall Street that others are not allowed to have, then this is not the America that it's supposed to be. And that is the fight that is occurring right now. And the millennials are not going to allow that unfair advantage to be maintained. And I'm with them. And I think we're going to have, I think GameStop was just the beginning of flexing some muscles. People think it was it happened, it's gone, it won't happen again. That isn't the case. What's happened is the technology-enabled generation is beginning to flex their muscles. And I chose my words carefully, Noble. I'm a man of color too. I may not look it. This is also about that dialogue. How do the disadvantaged people of America reset the playing field and participate in the wealth of America? That is what GameStop is really about.
No, I hear you, and I think it's always a good take on the idea of creating an egalitarian movement. The biggest issue now, I think, that, and a lot of countries are trying to figure this out. South Africa is putting out advisory warnings. The Philippines is putting out advisory warnings on crypto. I think that a lot of countries are beginning to fight their own internal dichotomy of whether or not this is good for their people. Because leading forward, who's going to manage? Who's going to run? Who's going to make sure that a lot of DeFi projects are legitimate? We've seen on multiple occasions over the last several months, DeFi projects pop up and then all the funds behind it disappear and the projects close down. So what is it that you believe that the regulators need to do now to kind of make sure that we don't want to stop it, we don't want the nanny state, but we also want to curb the unscrupulous who are out there taking advantage? What are your thoughts on that, Gary?
Yeah, I would just want to say one thing, Noble. I didn't get a chance to add a point. The Chinese will surpass, it was projected that the Chinese would surpass the U.S. in 2033. It's now going to be 5 years earlier. Actually, what year are we in now? 2023. What am I saying? So it's going to be 5 years earlier. And the thing is, the Chinese hold a lot of the T-bills. And the situation is, what was I had the 4-star admiral say this again. The guy's written a book on 2039, lived in China in a positive sense, right? So we got to really retool ourselves because it's going to happen 5 years earlier. What happens 5 years from now when the U.S. is number 2 in the world? It's not the strongest economy in the world. So, I mean, obviously, Israel's done a phenomenal job of positioning themselves as an innovation nation and startups and that kind of thing. We're really good at innovating here. But, what happens? And to David's point, it's, this pyramid that's out there and, this Ponzi scheme, what happens then? And if it's only based on the confidence in the economy, there's nothing, it's, fiat currency, what happens? And it's going to be interesting because you got people holding the debt and they're got a bigger economy than what you have. I don't know. It's going to be interesting. So it's, you see the cryptocurrencies coming around. I think from my standpoint, it's really to stabilize things. It's, moving away from the dollar, moving to this global currency. And we see, and it's, people are resistant about it, but it's happening today. You were asking me about money and why did I change the money? And I think Matthew was asking me. The reason was I lived in Russia a long time and I had to change dollars into rubles. And so I couldn't use credit cards because there was a lot of fraud and things like that at the time. And so I had to do it and I got addicted to it. There was no Apple Pay. It was just give me a money and get money at the change place. So anyhow, but I'm bullish on the future and I'm bullish that we can turn the thing around, but we better understand we got a challenge. We're not going to be number 1. And, let's hope when we become number 2, we don't do something that's odd. You know what I mean? There's ways to react when you're not happy. So what we got to do? What's that?
Look, Dave was nodding. He's about to say something. David, what's your take on that? Are you feeling?
No. I'm okay. I'm a little bit out of my league at this point. I'm not going to get. I'm not a super macro guy, so I'm not going to get all teachable on macro. But to go back to your point about regulatory issues. So again, lawyer guy, fund management guy, I get it. I understand the role of the law and regulatory activity and so forth. It's a hard regulatory activity because certainly the nefarious side of things is very hard because once you knock out one cockroach, there's going to be many more. I think nefarious activities though are coming down. I think people are becoming more sophisticated about how to weed things out. There will always be, thieves, but nevertheless, the regulators have a tough job, and it's only because they usually nefarious activities were limited to the borders of a country. Now these things go worldwide. I mean, they trade 24 hours a day. They're available in every single country. So unity on the regulatory front is really is necessary, and trying to go ahead and getting that unification is something that is in some ways unprecedented. I mean, certainly certain activities, drug trafficking, human trafficking, things like that, certainly legal authorities have dealt with on a cross-border basis. This is just, I think, a little bit harder. Innovation goes a lot faster. And so, the regulators really need to keep up the pace. And I think as of now, forget about the regulatory part of it. I don't even think many, central financial and banking authorities have really concluded where they stand on all this. So to have the regulators, it's kind of like the tail wagging the dog. You don't really know, where your financial people stand on all this. Being a regulator, you're trying to kind of make it up or, figure it out as things pop up. So I do think it's a difficult thing. I don't have, any particularly insightful answers on how you, properly police this.
Yeah, it's fun, and we'll come to final thoughts. One of the issues that we've seen is that some of these dApps function on their own. There's multiple Ponzi schemes now that are out there that just are functioning and operating. Once you build it, it's on the blockchain. there's nothing you can do. It's out there. People are using it, taking advantage of it, and there is no place to regulate it because who owns and controls it? And that's part of some of the decentralized activity that's been happening. Some closing thoughts you guys may have on where or what the view is for this upcoming year and how we expect the retail investors to behave. It would be great. So, we'll finish up with you. Give us your closing thoughts and how we can reach you, Matthew, and learn about the Keiretsu.
Yes. So let's see. The role of the regulator is to inform the lawmaker, ensure that good laws get on the books, and then make sure that they are maintained and enforced and that people are compliant. It's a challenging role because technology moves the world forward, and old laws can sometimes become bad laws because technology has changed the playing field. I think that as retail customers have not been well protected and cared for. And I'll give a very specific example, which is called insider trading and front running. Front running is simply where a big institution takes a look at what their clients are doing, and then they trade ahead of the client. And they basically take the value from the client because they adjust the price through their own trading efforts. It's been going on for years. Robinhood and Citadel have essentially been doing it. Robinhood sells its trades. Citadel sees them coming in. Maybe, we don't yet know, Citadel then front runs that inbound information. We don't know that. I assume it will be part of an investigation now. It's a prime example of what the regulator needs to do. They need to look at the financial system. They need to see where it's tipped against the retail investor, and they need to fix it. What can we expect from retail investors going forward? They are beginning to realize they have power, and new technology is giving them that power. And I think that they will not take no for an answer. I think the millennials that have grown up in MMORPGs, buying and trading virtual items at scale, have skills that Wall Street doesn't understand, and they're going to exercise those skills to get the playing field tipped in a fairer direction. And I'm all for that. But I think the regulators have to do their job too, and they certainly have to squeeze out the bad actors and the bad players as always. How do you reach me? Blockchaincoinvestors.com is probably the best place to go. And as always, Gary, David, Noble, thanks for listening to me. I know I've been a little bit more politically active today, but it's because I felt like the GameStop was a rallying cry and an important thing. And I think it'll be at least a year before we really appreciate just what it was. It was not a flash in the pan. It was the beginning of a lot of things that are going to start happening, I think.
Awesome. David, any final thoughts on how we can find out more about ProChain Capital?
Yeah. So I'd like to go ahead. Maybe this is, the start of another discussion like this rather than an end. But I'd like to comment on the fact that, I think retail investors in crypto per se is going forward. I don't think going to be as disruptive as they possibly could be, or they have been, let's say, in recent days, weeks, with respect to equities. I think in the crypto space, I think the retail folks were there pretty early. The institutionals are now getting on board more and more, and I think the retail, the non-innovative retail, the retail that now wants to be part of this asset class because they do believe where things are going. Let's take momentum aside. Let's take, technical disruption aside. Just to be part of and invested in this asset class, I think they can and they will. And I think that is important. I think there needs to be ETFs that are, dedicated to the asset class. How the, regulatory authorities go ahead and, get to that result, I whatever it takes, but they got to get there because the retail investor does need access in a better way or more ways than currently exist. And I think that that's going to continue to help the asset class. It'll not only help the asset class from an investing standpoint. It'll also help the asset class from an educational standpoint. And then at a certain point, I don't think it's tomorrow, in a use, from a use standpoint. So I expect the next year, the retail investor to continue to become invested. I certainly don't expect the retail investor to disrupt in a major way what's going on in crypto assets, cryptocurrencies. And I think that, the retail investor, like I said earlier, was there at the very beginning. Those laggards will come on, but heck, a lot of institutional investors, a lot of smart money, wasn't there at the beginning either. So, jump on the train. You don't have to feel bad that you missed it.
And where can we find you, David?
Oh, I'm sorry. Yes. You can find me at David, David, at prochaincap.com. That's David at prochaincap.com. Thank you.
Awesome. And Gary, your final thoughts on this topic, and where can we get a hold of you?
Yeah, sure. So, I've said, and I've been saying for a number of years, that intellectual capacity is evenly spread around the world, but opportunities aren't. And this whole transformation that the globe is that's taking place right now with cryptocurrencies and again, the digital transformation is impacting all our lives. And so in one way, I'm very excited about it. It's just, it's a change, right, for all of us. So you can reach me, Gary Fowler, on LinkedIn. You can reach me on Twitter. I have a couple of shows out there. GSD presents Silicon Valley AI and Tech on Tuesdays, and GSD presents Gary's Picks, and that happens every other week, where we highlight the top startups in the world. So it was a great show. Great seeing our friends here. Great, Noble, Matthew, David. It's great to be here today. I enjoyed it. Thank you.
And guys, my name is Noble Dracone. I'm Dracone Capital Partners. You can find me on LinkedIn. You can find me on Twitter at Dracone. We're deep in both NFTs, blockchain, game development. We love the space and believe this is the future of humanity. And so at the end of the day, I want to say thank you to Maria, Latoken, VCTV, Kyle for letting us be the guest host, as well as having everybody on. And at any time, if you want to be one of the investors who are talking today, or you have a company that you want to present and you want to be on our show, just reach out to Maria, the Latoken team, Kyle, and get on the show. Thanks a lot, everybody. We appreciate you being here, and we look forward to the next show. Have a great day.
Bye-bye.
Bye-bye, everyone.